Okay, good afternoon, everybody. So hope everyone is well. Welcome to the API Chronicles, Unlocking the Future, a live celebration of APIs hosted by Marqeta. My name is David Woodward, Senior Strategic Partnership Manager here at Marqeta, and I'll be your moderator for today's live stream. And today we're discussing accelerated wage access, also known as earned wage access, which is an innovative financial solution that empowers workers with immediate access to their wages. So I'm delighted to be joined by a fantastic panel of industry experts this afternoon. We have Clemens Mooring, Chief Operating Officer at Hasty. We have, we're hoping to have, I should say, one of our colleagues from Visa. So Apoorv Chaturvedi, Senior Manager for GTM and Commercialization at Visa, will hopefully be joining us shortly. And we also have Anthony Pekulic, VP of Accelerated Wage Access and Banking and Money Movement Products here at Marqeta. Good afternoon, gentlemen. I'll let you introduce yourself in a moment, but just to set the scene for today's discussion. So in today's live stream, we'll be exploring a range of topics around accelerated wage access, or AWA. We'll be looking at how it enhances financial wellness by reducing the reliance on payday loans and enabling better money management. And we'll also discuss the transformative impact it can have on things like worker satisfaction, worker retention, and productivity. And we'll also hear from our panel as well about their specific experiences, the challenges they've had, when they're implementing this, but also their successes as well. Let's get started. So we'll turn it over to our panel for some introductions, starting with Clemens. Clemens, if you can introduce yourself, tell us a little bit about you, your current role, and your experience to date.
Sure, yeah. Hi, everyone. Thanks very much for inviting me to be here. I'm very excited to chat about accelerated wage access, earned wage access. There's also probably another 2-3 terms flying around these days about the industry. But I guess in the end, we all mean the same thing. I'm COO at Hasty. Hasty is one of the first providers in this space in Europe. We today are live in 4 different countries in Europe. Very proud to be working with some incredibly innovative companies in the field of pay. McDonald's, PayPal, we work with the NHS, amongst others. So, we'll be talking a lot about, I guess, the product, so maybe won't go into that too much right now. Maybe last thing to mention from a Hasty side, next to the earned wage access bit, what we actually try to think about is financial well-being as more of a holistic view. So as part of the Hasty functionalities, you would also see things like financial education, money management tools, discount savings, all that stuff. But yeah, very excited to be talking about accelerated wage access here today.
Great, and thank you, Clemens. We'll touch on some of those points actually later in the conversation, because as you say, it's one thing implementing a solution, but actually how does it fit around a wider education piece? What can companies do around educating their employees, not just around this, but probably more broadly as well. So we can touch on that on the discussion as well. Anthony, I'll hand it over to you in terms of an introduction as well.
Yeah, hi everyone, Anthony Pekulic. I just joined Marqeta 2.5 months ago. I'm responsible for accelerated wage access and banking and money movement products here. Prior to this, I've spent 23 years in cards and payments, and a good chunk of that actually working on payroll solutions and having a lot of work done on earned wage access and accelerated wage access as well. This is a great topic for me personally. It's just one of my, one of the things to see the growth of this product over the last few years has been tremendous, and I think it's a valuable product for consumers and for individuals. So I'm excited to be here and to chat more about it.
Cool, good stuff, and good timing, Anthony, that you joined a couple of months ago. So got you straight in onto this discussion today. So perfect. So I tell you what, let's start with the basics actually. To set the scene for everybody here. So and let's in terms of how we define or how it is. Can you guys explain what accelerated wage access or earned wage access is from your perspective, and fundamentally how it works? And Clemens, if you want to kick us off with that.
Yeah, sure. Maybe rather than going straight into technicalities, I'll try to explain how, at least here at Hasty, we think about the concept overall. Because to us, it's really about bringing effort and reward closer together. So if you think about how we worked as people, maybe 100 years ago or so, you'd be someone who goes to a factory, you do your work, and at the end of the day, you get a paycheck for the work you've done that day. And for a very long time, that's kind of how you were rewarded for your effort, usually at the end of that day. And it's only around 70 years ago, here in the UK at least, where I'm based, that kind of changed. And we started seeing people pay their staff once a month only. A lot to do with kind of the administrative burden of paying people. But that has had a really big effect on how people can manage their money. And kind of 70 years on, we find ourselves in a world where pretty much everything is on demand, first of all. And secondly, a lot of our bills are like we have to pay up front. Your rent bill, your electricity bill, your Netflix charge, all of these things are usually upfront payments. But in the world of pay and the money you get from your work, it's very much the opposite, and it's often in arrears. So what accelerated wage access tries to do is basically go back to basics and bring the effort and reward closer together by allowing someone to have more or less instant access to their earnings, so that if I'm an employee and I do a shift today at the restaurant I work at, that at the end of that day, I can get paid for that shift. That's how I describe it in a nutshell. I'll let you go into more of the technicalities.
Yeah, no, great. And Anthony, anything to add to that? It's a great summary. Thanks, Clemens.
No, I think that was a great summary. I mean, at the end of the day, we have been, as kind of a society, if you will, when you look at employment, and even in the US, right? I know that there's been advances where, people used to be paid monthly. Now people can be paid as soon as weekly. But even then, given the circumstances of how, unfortunately, many Americans, for example, do not even have savings, right, to pay for certain things, or things may come about, this solution acts as a way to access said earned wages, right, at some point to whatever percentage. There are many ways to do this, and I think we'll get into some of those discussions, right? There are different paths and different ways that people are doing this, but fundamentally it comes down to someone needs money sooner, and the mechanisms of payroll today do not support, being paid daily or being paid on demand, right? Because of all the other nuances related to that. So it really provides that opportunity to get something that I've already earned a lot sooner, which can help me even put food on the table, for example.
Yeah, absolutely. And as you've both alluded to there, there's obviously, this is a different approach to traditional payroll methods. And so obviously getting the money in sooner based on the point you've earned it is a key difference. But what are the other kind of key differences between accelerated wage access and traditional payroll systems that are out there today?
I could start. I mean, whatever, which way.
Yeah,
I mean, I think, look, there's a couple of things. Payroll, if you look at payroll, right? So payroll is a very set way of doing things. And I'm going to speak more from a US perspective, but I think it's pretty global in a sense. You're calculating, in some cases, hours worked, if it's an hourly worker or salaried worker. There's a set salary, there's taxes to be paid. There's other health benefit deductions that may occur, various other things, right? So all those things have to be done. Typically, if you're doing weekly payroll, you're processing everything by Wednesday, you send the money in, it sends out, usually you get it by Thursday evening or Friday, depending on your bank. So it's been a set process for a while. There are a lot of steps. To be fair to payroll, there's a lot of things that have to happen. Processing a payroll is very expensive. There's a lot of moving parts. There's people involved, right? So statementing is also challenging, right? You have to get statements. That's a legal requirement, and you have to get paid. Has to be available on the day. That's also a legal requirement in many states and here in the US. So when you take aside that process and the way it's been working, what earned wage access done is creatively find a way to say, well, wait a second, how do we establish that Anthony actually has done already a week of work or 5 days of work, and he's not getting paid for another week? we look into usually other data sources. So really, earned wage access applies itself by really integrating and getting data from different sources, from a time and attendance, whatever various other things, to really establish and calculate, right, an on-demand kind of request for this pay. As I mentioned, there are different mechanisms to do it, which makes it unique from payroll. Whereas payroll, you have to do it in a certain way. It's established. Earned wage access does allow different paths depending on the provider and how they want to do it. But fundamentally, it operates more of a one-off, like off-cycle type of process. But all of them do require payback, usually by next pay period, right? That is the one thing. And so that could be via deduction or other ways to do it. So again, many different paths to get to the same place.
Okay, cool, good stuff. And Apple, great that you've been able to overcome the technical challenges and join us this afternoon. So welcome. Would you be able to give us a quick intro in terms of yourself and your role and your experiences to date? And then we'll go dive back into the discussion.
Fantastic. Thank you. I was having technical difficulties. Finally, I was able to join on my phone. Apologies for that. My name is Apurv. I'm part of the Visa Direct team. I am part of the go-to-market and commercialization for Visa Direct, which is a product which enables earned wage access, accelerated wage access. It runs in the background. We partner with our enablers to help deliver payouts to cards or accounts or wallets, depending on what the endpoint may be. I've been with Visa for about 2 years now, and my background is in investment banking and strategy and ops.
Cool, good stuff. And really keen to get your insight to understand that Visa has just rolled out accelerated wage access internally as well. So really interested to kind of get your thoughts and perspective on that, as well as the broader market too. So which we'll get into. So great. So we've kind of kicked off understanding what accelerated wage access is and kind of how it differs to traditional payroll. In terms of some of the benefits, now there's obviously a whole host of reasons why companies are adopting this. But obviously, as we mentioned earlier, at the heart of this, it's about improving the financial well-being of employees. So we'd love to get the panel's thoughts on how accelerated wage access does improve that employee financial well-being. And Apurv, we'll kick off with you.
Yeah. So earned wage access, I can maybe start off with some context. So in UK in particular and European market in general, pay cycle is often monthly or in 4 weeks. That's the pay cycle that has been seen. And we see a lot of employees in particular sectors where people are not earning very high incomes. They exhaust a lot of their payday income within a day or two, and that is for their rents, their payments that are due, which puts an enormous cash flow pressure. So it doesn't always matter if the person is able to afford what they are buying. It's just a cash flow issue that they are expecting payments to come in, but they don't come in until the end of the month and they have bills to pay. So earned wage access solves for a lot of personal cash flow needs. And in households where people are not very educated about cash flows, about spending habits, earned wage access as a tool by employers acts as another way of educating the employees on the use of earned wage access in a sensible way and how to access money that they already have in a sensible way where they can use it without having to get into payday loans or any kind of debt instruments that they're using for everyday payments.
Yeah, perfect. And Clemens, anything to add in terms of that employee financial well-being piece?
Yeah, I think, first of all, that's exactly what we're also seeing. Maybe if I add a few examples of what our users are telling us and how this is helping. I think one thing that comes up quite a lot is a lower reliance on other high-cost credit options. I think what we're seeing is that often if people have these liquidity challenges that Apurv just mentioned, they will need to solve them somehow. And the alternatives often for people are using credit card, using their overdrafts, using a payday loan, using a more unstructured loan. They will, if you need money, you are going to get the money somehow. But often the more desperate you are, the more shady it gets and the worse the long-term consequences. And I think the beauty of accelerated wage access is that you have a very transparent, a very fair, very clear process of getting short-term liquidity that is based on your earnings. So there isn't this debt spiral trap that you might fall into. So I think that's a really big one we hear. And then probably a second one, actually increasingly recently, is people telling us that it helps them with budgeting. Also, Apoorv mentioned an interesting dynamic here in the UK where some people are paid on a 4-weekly cycle, but a lot of their other payments, like rent being the biggest one usually, is on a monthly basis. And if you're getting paid every 4 weeks, that means your months always look a little bit different in terms of when your money's coming in and when your money's going out. So a lot of people are trying to use products like ours to smoothen out these inflows and outflows.
Yeah. Yeah, it's a really good point. Well, both, really good points. And Anthony, anything to add on this in terms of kind of the response for how employees typically respond to having the access to this their cash earlier?
No, I think both are well said. I mean, here in the US, one of the biggest issues is credit. So while there are credit alternatives, unfortunately, many people can't qualify for them, and credit has gotten tighter. So one of the things I always say is that, the lack of credit or access to credit is really driving a lot of the growth here in terms of why people are using wage access. But I think Clemens and others, talking about just the income smoothing effect is definitely there. I do think it could be a very powerful tool to do that as well. But fundamentally, at the end of the day, if there were access to a simple credit card and everything else, I think it would potentially change the way people did this, because for those of us that have had credit cards and fortunate enough, that's sometimes what we've had to do, right? Sometimes when you have expenses, you just put a credit card in and you end up hopefully paying it without having to pay too much APR. And regardless of that, I think the best quote is people are going to find a way to get money no matter what. And so you're going to have to do whatever you can, right, to survive. And that's what's happening right now.
Yeah, perfect. Good stuff. Yeah. And besides employee satisfaction, from an employer perspective, what are the benefits, the direct benefits that employers for offering this service to their employees? Apoorv, I'll kick off with you.
So I think the models, and what Anthony and Clemens mentioned, the models have been changing. When earned wage access was introduced, it was a value proposition for employees to, pay a certain fee and withdraw money. But now the models are changing, and we see this to be partially or even completely funded by employers. And mostly because there's a very high cost of training new employees. So we talk about attrition first. Whenever employees move out of the company, there is a significant cost to train, rehire new employees. And in the UK, the amount stands at about £30,000 to train any new, like the total cost of hiring and training new staff. When employers offer earned wage access as an employee benefit, employees are far more likely to stay with the company. And we have evidence against this stat, from various sources, not just one, where employees are far likely to stay with the company, which has a direct impact on the employer's cost base. So that is one. I think in general, the employees feel far more comfortable staying with the employee because they think, okay, the employer actually thinking about their well-being, financial well-being. So that is another perk which is intangible to say, but we see survey results showing us that employees are far likely to stay with the organization who think about the employee's financial health.
Yeah, yeah, great. So yeah, very much an employee retention tool to which makes perfect sense. And Clemens, from the host of companies that Hastie's working with, is that kind of ring true with what you're seeing, and anything else to add in terms of the employer benefits?
Yeah, no, absolutely. I think attraction and retention are the big two benefits that are measurable, that have a real monetary impact for clients. A lot of clients show us data around how they're seeing more applications for roles that advertise accelerated wage access versus the ones that do not. Similarly, on the retention side, we see data, same as Visa, that coming from lots of different sources around people staying longer, because this is usually one of the highest uptake benefits that our clients have. I think a kind of a new dynamic, because Apoorv was mentioning there is a bit of a shift now in how organizations value this product. A new dynamic we're seeing with some of our clients that are tech businesses is that they want to be seen as being innovative in all aspects, including pay. And so it's again a bit maybe harder to measure, but having a truly innovative brand around on everything they do and all their benefits, that's another maybe less tangible benefit that we're seeing.
Yeah, and you're seeing it appear on job descriptions. So the fact that this is available.
Yeah, 100%. And the interesting dynamic is if you look at certain industries, like in the UK, hospitality, for example, is now on the maturity curve, I would say very high in this product. If you want to hire someone to work at your local cafe or restaurant, you're probably going to have to offer this because all your competitors are offering it. So as a result of that, we're really seeing this as being one of the key benefits that is put on job ads.
Yeah, and becoming a hygiene factor then, even though it's kind of relatively newish, right? This as a concept, but already becoming a hygiene factor then for certain industries.
Yeah, exactly.
Cool. It's interesting, and I guess keeping it on the employer focus for a second. So obviously you mentioned there in terms of this kind of direct financial benefit, Apoorv, you mentioned for companies through staff retention and obviously the cost of training up new staff. Are there any other kind of financial benefits to employers to taking this? Anthony, I don't know if there's anything else you wanted to flag on this.
No, I mean, I think I'm not necessarily sure if there's financial benefits, but I do think, at the end of the day, everything is financial, right? So, getting a new employee, training them, right, there's a cost to that. And I think that there's definitely the reason why that, employers now are basically saying they need to do this. So we have seen the shift. Originally, when this started way back in the day, over a decade ago, it was very much trying to convince these employers to do it. And they're like, okay, maybe I'll do it. And in some cases, like Walmart and others helped drive it, for sure here in the US. But I do think beyond just financial benefit, I think I think what was being said is that it really comes down to retention, and retention plays itself in big ways across. And especially when there were times here, in the US and I think around the world where it was hard to find workers to do work. We had even here in California, there was a shortage of service staff and others, right? Because they just didn't want to even bother. They were getting government benefits and they didn't bother going to work. So this was actually a way to attract people to come in, amongst other things. And it really drove some growth in retail and other, fast food and various other industries where they were seeing a kind of a decline in employees.
Interesting. Yeah, interesting. Cool. Yeah, and Clemens, any other kind of use cases that you're seeing?
Yeah, I mean, next to the kind of attraction retention, that being one topic, another very interesting case we've seen in the last few years is in the healthcare sector, where often there's ups and downs in terms of availability of, say, nurses or doctors in a hospital. So next to let's say a nurse's kind of day-to-day role, they might have some extra shifts that they could take up to fill in these short-term needs. What we're seeing often is that these shifts are not paid immediately after the shift is done, but they fall into another process, and then actually you only get paid 6 weeks after doing that shift. So you're a lot less likely to do that shift because it's not going to help your financial situation in the short term. So what we've seen after implementing Hasty for some of those healthcare clients is they actually see an increase in shift uptake, because these people are now able to access the reward for doing that shift immediately. And that has had a very clear financial impact, because the alternative to the in-house nurse taking that shift is to get an agency staff doing that shift at a huge markup on cost. So that's a very real cost saving, actually.
Yeah, and that's a really good point, actually, in terms of people taking on additional shifts, additional work is often because they're looking to pay for something that's immediate or upcoming in the short term. So actually, therefore, having the money coming directly in, and as you say, not having to wait 4-6 weeks for that to come in, solves for for the reason why they're taking or would like to take the shift in the first place. So yeah, great. And so so kind of a whole ton of reasons about why a company would want to implement this type of solution. But from a technical perspective, how easy or how difficult is it to implement this? And can it be seamlessly integrated with existing HR and payroll systems? And Anthony, I'll kick off with you on this one.
Yeah, I mean, I think the advances that we've seen, even in the last few years, have definitely shown that could be the case, right? So it really is a question of how much the employer wants to be engaged, right? There are opportunities to, and I think folks are really looking at it from different lenses, right? So there are the direct to employee offerings, right? For example, that are doing where they're taking data from other sources and building almost like basically credit risk model, right? To say, I think Anthony's going to be paid, hopefully, this much, so I can maybe offer this. Whereas, we have the integrations. Historically, it's been you work with an employer and they're trying to get payroll files or other time and attendance files from their provider. It was, there was implementation required. There's sometimes even resources required. Now we've seen some providers actually just directly integrate into those systems and even offer an experience in an employee self-service kind of portal. And those have seen, there's been some traction there. And I think, and frankly, we have others like large neobanks who are offering this as well and advertising it very clearly on, American football games and everything else, right? They're really pushing this hard. So there has been different methods to get around to do this, but employers, if you talk to employers, and I've spoken to thousands in my career working at ADP, 90% of them will say, I don't want to deal with this. I need it. I'd rather just you take it from me and do this. There are, though, those employers that are very engaging. Walmart's an example, right? They provide employee financial services of many kinds. And so you will get a mixed bag of what it is. But for the most part, people are really looking for something seamless. But they need to have this. Like this is really what's kind of changed in the last few years.
Yeah, interesting. And Clemens, from your point of view, we'd love to get your take on how easy your clients, your customers have found implementing this solution.
Yeah, I would definitely echo, Anthony, some of your points. Pay is a very sensitive topic, and you cannot get pay wrong. People expect to get paid on time, and they should get paid on time. So trying to innovate in that space, I think, is also not the easiest. What we've tried to do at Hasty, and like Anthony said, there's lots of different ways in which you can approach accelerated wage access. What we've tried to do is build a solution that can sit alongside a traditional payroll mechanism. So put very simply, how the Hasty app works is that we integrate with a client's time and attendance system or their workforce management system, basically wherever data sits, to know, yes, Clemens has worked one shift today and this is how much he's earned. We get that data into our platform, and then we will attribute a value on that based on what that platform is telling us and what the hourly rate maybe of that person is. And that is then the value that someone will see in the Hasty app, that the employee will see. And they can withdraw that money, or they can leave that money and not do anything. But we will basically continue making that available until the end of the pay cycle. And at that point, we send data to the payroll system that the client uses, and say, okay, Clemens has withdrawn £50 this month. So when you're doing your normal payroll, deduct £50 from Clemens' salary and pay that back to Hasty. So that allows that process to still work. It also means that for anyone who's not using Hasty, they can they're basically unaffected. They continue to be paid as normal. And we found that to be a bit of a lower hurdle often for clients around this very sensitive topic of pay.
Yeah, perfect. And Apov, to bring you in on this this question around technology. So in terms of the technology or the platforms that are most commonly used for AWA, what are you seeing out there in the market?
Yeah, I think what the point that Anthony and Clemens both mentioned, it's the way it's implemented really matters, because earned wage access or accelerated, the word itself means that you need to make it fast. A lot of times, if you're trying to withdraw your earned wages and you are still getting it like after a week, it's not really instant. So a lot of focus is being driven on instant and real time. And with the evolution of real time rails in almost all of the countries that earned wage access as a concept exists, I think that has really sped up the way people are accessing their money. And when we talk about how we are enabling it, so Visa enables, like our product Visa Direct enables this to cards. So instead of going through bank account rails, you can just go through card rails. So as an employee, I add my 16-digit card number and I can access whatever I've earned through whatever period that we are talking about. And that money just comes through the card rails into my bank account because my card is already connected to my account. That's one of the ways we are seeing solutions being deployed. We have a couple of partners on earned wage access who are doing this, and customers prefer cards because that is something they always have on hand. Typically, we see that bank account details, not so much, because you really need to log in or find your details saved somewhere. But card, you tend to have on hand. So we see a lot of focus on making earned wage access reach customers as quickly as possible using the fastest rail possible, whether that's bank rails or card rails, or even now digital wallets that they're coming up. So we see a whole wide variety of ways people are accessing their wages, and we provide solutions to cater to each of those rails. So that's what we are seeing, and that's what we are working with our partners with.
Okay, cool. Yeah, and Clemens, is that what you're seeing as well in terms of the kind of the methods of disbursement?
Yeah, Perf, I think you mentioned a really interesting point there around the payments infrastructure having to be in place for this to work. We started in the UK because in the UK you have the UK faster payment system, which has been live for a number of years now, is working amazingly well and allows people to do instant transfers between bank accounts seamlessly, basically. In the Eurozone, that journey has taken a bit longer. I think we're now at the point across the Eurozone where with SEPA Instant, which is basically the equivalent of the UK Faster Payments Network, has enough of an adoption with all the big banks that we can do these instant payments at a percentage that is high enough that we deem it acceptable. What I can only echo Po's point around what people really don't want is that, we say this is an on-demand product, and then the payment takes a day, or you have to wait for the weekend until you get your money on Monday. So that is a really critical point, and probably, I'd say, also one of the reasons why there are still a lot of countries in the world where maybe this hasn't taken off as much as it has in the US and in a lot of European countries.
Yeah, so you're kind of relying on that infrastructure to be there to deliver what it says on the tin, essentially, around the whole process. Makes sense. And in terms of the market opportunity for accelerated wage access, so you've given some examples there, Clemens, with the nursing healthcare example. Anthony, you were talking about kind of fast food examples. In terms of the adoption of accelerated wage access, what does that look like across different industries? Is there kind of higher uptake in certain industries that you're seeing, or what are the main ones that are most common? I'm sorry, I need to Apple off.
Yeah, I can go first. I think again, this has been, like it was mentioned briefly by Anthony and Clemens both earlier. The more the employee or the person who's working needs like money every day, the higher uptake you see in earned wage access. And we can start off with, say, gig economy. So you'd have gig workers. They really are working on an hourly basis, and their pay is predicated on number of hours they're working every day. So you would see like delivery personnel would face a lot of issues if the money is coming to them every 4 weeks. And which is why a lot of gig platforms, freelancing platforms, are implementing earned wage access solutions or on-demand pay, where you've worked a certain hours and the money is immediately accessible. We see a lot of uptake there. We see a lot of demand there. Healthcare is something that Clemens mentioned earlier, is that shift-based working, wherever there's shift-based working, which is in healthcare, it's in logistics, where a lot of people are doing transportation and moving goods here, like from across borders, and especially in on-road transportation, people are driving trucks or are working in warehouses. That's where we see a lot of demand as well across like these sectors. I would say are like primary one, but then you have consumer and retail where people are working in shops and stores. That's something we see a lot of uptake in.
Yeah, so pretty broadly applicable. Yeah, Anthony, from a US perspective, any kind of anything or new trends appearing?
No, I mean, I think it's very similar. It tends to be, it is, so put aside gig, because gig definitely, like, it's been there for a while. Gig workers, to me, I call it more on-demand pay than I do earned wage access, because you don't have to worry about tax filing and everything. It's a little simpler. But regardless, the gig worker space, no question, right? Huge adoption, like Marqeta clients. We have some large clients like Uber and others. I mean, the adoption is significant there. But then as you get into the hourly work, I call it the hourly worker segment, which is really those that have unpredictable sometimes salaries, because they don't always work the same amount of hours. Sometimes they work overtime, sometimes they don't. Those tend to be the folks that do actually more than one transaction. Sometimes they do 2, 3 more a month, right? So to Clemen's earlier point, they're using this as a tool. Like, this has become a normal thing for them, right? They're doing this as a normal part of their payroll. But in terms of industries, I think it's all the same industries. I do think healthcare is definitely one as well that I would add. There are a lot of workers, hourly workers there that are not paid as well. I'm not talking about doctors, obviously, but more just staff. But I do think it's going to start making its way a little more upstream. Here in the U.S., it tends to be those under 50,000 salary, maybe 60,000. But I do think it's going to start making a little as it goes upstream, because regardless of whether you're doing better than that, I think there are situations where, like, you want to go, you want to pay for vacation, you want to pay for something, you want to buy a gift for your child. There are occasions where maybe you feel this could be a good tool and that you need to do it at that time. But I think those will be more one-off transactions than it will be regular use, right? So I think we're going to see different use cases.
Yeah. And Clemens, from your point of view, is there kind of any kind of trends? Is it kind of, I presume, similar industries to what Apoorv and Anthony have spoken about, but anything kind of new popping up, any new verticals? And do you agree with that point around it's going kind of upstream a little bit? So.
Yeah, I would say overall 100% agree on the verticals. We are really seeing these different adoption curves taking place. I think increasingly now it is, as you say, Anthony, going upstream, and we're just seeing people want to be paid more flexibly, kind of out of the box. I mean, the percentage of Gen Z individuals in the workforce is increasing. A generation that has very much grown up in an on-demand world. And if you take that in combination with this other trend that we're moving away from kind of end users having to pay for this, but actually usually it's the company is paying for this. So it becomes a free service or a free benefit for the end users. It kind of means that, there's no downside to using it or accessing your pay as soon as you've earned it. So how we're seeing that is like the kind of clients that we are signing more recently. I think we would have never signed 3 years ago, but we are now at this point where we have moved upstream a little bit.
Interesting. And of course, we can't talk about a financial services product without mentioning regulation. And so, Anthony, I was keen to get your perspective on fun topic. Hey, but are there kind of any regulations out there governing this? I appreciate this will be from a US perspective, or any incoming regulations that are around this.
I'm not an attorney, and I'm gonna play one on TV, so I'm just gonna keep it very high level. I mean, I think. So recently, there has been some, not regulation, but guidance, I would say. So the Consumer Finance Board here, so the CFPB, right, who kind of oversees consumer products, and especially financial service products, has previously in the past has made some statements, and there was some guidance back now 4 years ago, where they were treating this as almost a separate category, right, of transaction. However, in July, the CFPB kind of took a very different stance where they essentially said this is now a consumer loan that needs to be filed under the Truth in Lending Act. So, I think that changes things pretty dramatically. There's been a huge uproar in terms of response to that. I know a lot of, folks have pushed back, obviously. I'm not going to get into whether it's bad or good. I think that it, either way, I think, what the CFPB is trying to say is that they feel the fees and everything associated with it should apply as an APR, as if you're getting a loan. And that does complicate things significantly, especially here in the US, where you have state by state caps on interest rates and various other things that come into play. So it really can shake the market up a little bit. We will see. The period of comments was over. We're going to see what they come back with. A lot of folks are hoping that it comes back to somewhat what was in 2020. Regardless, I think it will have an impact in some way. And I think that, what we hope, regardless of what happens, is that this doesn't impact the ability to offer this, because, if you really think about it from a general perspective, the fees, are what they are, right? Everyone has to operate. There's costs associated with sending money via Visa Direct or having cards or whatever. But fundamentally, the hope is, and the industry is pretty adamant. I mean, you have a product that doubled in size almost here from 2021 to 2022, right? It grew 90%. There's a need for this. And unfortunately, it's because wages are not keeping up with cost of living. And so we hope is that the regulators realize that and don't try to put too much burden where we start seeing players not offering this. And that would be a real shame, because then it'll go back to payday loans and other methods which are not great for the consumer.
Yeah, no, absolutely. And Clemens Apurva, I won't ask you to comment on the regulation in question, but unless you really want to, of course. But my next question is more around regulation aside. Are there any hurdles, or kind of what are the main hurdles you see in terms of adoption of accelerated wage access? Apurva, starting with you.
Yeah, I think what Anthony mentioned is the scenario everywhere. I think FCA, which is the Financial Conduct Authority in the UK, they are monitoring this. They had a press release, I think a year ago, where they are monitoring these programs very closely. And as it is with technology, regulation is usually playing catch up. So the tech came first, solution came first, because there was a demand for it. And over time, the regulation will mold around how the tech is being implemented so that the consumer rights are protected. I think that's where the regulation will move towards. I think it's still early days, because it's just come into the attention of the regulator that this can actually work. And this is a great solution, because it's actually avoiding consumers into a negative financial cycle, which is of payday loans. Because the more a customer, as Clemens mentioned earlier, like the more in need the customer is of the loan, the worse their outcome is from that loan. So we want to avoid that, and this solution mitigates that to a significant extent. In terms of the implementation challenges, again, this was covered earlier, that it's the hardest bit is to integrate with the payroll providers, because nobody wants to really touch payroll, because it's sensitive. It needs to be on time. There is very little flexibility there. So a lot of implementation often happens side by side. As Clemens mentioned, you have another parallel on-demand accelerated wage platform where it talks to the payroll or the workforce management system, and then that can be deployed. And the way of executing the payment also now differs. So you can either have it through bank account using real-time payments, or you can have it through cards. And we see now wallets being, as it's not significant right now, but we see a demand where people are now using digital wallets and would like to get money in digitals, just as a tool how you keep mental accounting. You keep some funds in one place and you keep some in the other. So we see these things. Mostly it's on implementation of how the employer actually puts it in. And you need enablers like Hasty, who are putting in the effort of talking to the workforce management systems to implement such a solution.
Makes sense. And Clemens, anything to add?
Yeah, we've mentioned, the regulatory side, which even as someone who is directly in the industry, we're actually big or massively in favor of there being the right level of regulatory oversight. In the end, this is all about helping consumers. what I think everyone involved doesn't want is that we have a similar negative experience as we had in the payday loan industry. So I'd say from our side, very much for that. And actually last year ourselves with another 6 of the UK accelerated wage access providers, we put together a bit of self-regulation here in the UK, and we're now being audited against that. So yeah, 100% see that as a really critical part of the journey of, or the maturity journey of this product. I mean, Apoorv, you mentioned the payroll integrations piece. Yeah, 100%. I think that's definitely been a big challenge for us. It's also a very fragmented market, payroll. There's so many providers, especially if you want to do this kind of product internationally. Sometimes you think you're talking to the same company that you might already have an integration with, but turns out they're so big that you have to integrate with someone else entirely. So that's been a challenge as well. The one I would add is actually almost more of a softer one, but we see less of now, but we do still see, which is sometimes the disconnect between the decision makers in a company about the financial well-being of their staff and the staff. Sometimes when we speak to, it might be an HR director or a CFO, whoever ends up being the buyer of this product, they say, I don't think we need this product because our staff doesn't really have financial stress. We don't have these issues. Perhaps this is quite a UK specific topic, because in the UK, I think a lot of people refrain from talking openly about their finances, especially to their employer. But what I think for us has often been a challenge is to actually say, no, let's do a survey with your staff. Let's find out what the real health is of their financial well-being at the moment, and then get them a bit more aligned on that to essentially get them to convert or to launch an accelerated wage access solution.
Yeah, because I was going to go on talking about kind of what best practices there are for educating employees about the use of AWA, but it sounds like actually there's more of an education piece to the companies themselves, as you say, the decision makers and the buyers of these types of solutions on the benefits before it, to make sure it is adopted and implemented and supports the employees. So that's interesting point around that you make, Clemens, around that. Not necessarily the decision makers understanding what's actually the reality for their workforce. Interesting. And in terms of, we've obviously kind of spoken about what it looks like today, but if we're to fast forward 5 years, 10 years, in terms of the trends that you're kind of seeing or forecasting, Anthony, I'll turn this one over to you. What kind of, where do you see the direction of this particular solution, and kind of what would it look like 5-10 years from now?
Yeah, I mean, I think we're going to still see growth in it. I think that, and fortunately and unfortunately, I think, because I do think we won't see salaries catch up probably still for a while. I think there's still going to be economic hardships no matter where you are. I think, whether it's the US or anything, you're just going to have a percentage of individuals, unfortunately, that and because the cost of living will continue to go up, real estate goes up, everything goes up, right? So it's just part of, unfortunately, what life is. I think what we'll see is definitely continuing to see, I think, a few things. One, I think the integrations aspect of it, I would like there to be more of an open banking approach to this. I've always said this in payroll, where, if I'm changing employers, which I just recently did, and I have to redo everything, and, I think that would help significantly, doing some sort of like open payroll or open pay kind of protocol where our data is somewhere safe, and available via API. And so these kinds of things can be done easily, because I do think this is going to become more norm. I think the other thing is we're going to start seeing payroll companies, they've already started building towards this. We're going to start seeing some companies maybe start experimenting with quicker pay cycles, right? And maybe trying to give pay sooner than they have, and trying to process it in a better way. Many of the large payroll companies have been forced in a way by smaller ones who can operate more dynamically to do this. I think that's going to be the second thing. I think we'll continue to see growth outside the US and the UK and other markets. I think in Europe, I do see that there's a ton of opportunity there we're looking into as well. But the other thing is too, on the other end of it, I think we're going to start to see providers looking strategically at what else can be provided? So it's not make this transactional, right? Because I think part of what's become now is just, okay, I give David your money, you're done, right? And I'm done. But it's more like, well, what can I could do for you, David? Like, yes, we could give you an account. Maybe we can help you give a secure credit card, build your credit. Is there buy now, pay later options because you probably broke your TV? Your salary may not cover even what you've earned, right? So is there, so I think there's various different things that I think we're going to see providers come in and be creative about, because it's going to be more about how do I retain, but also help customers at the end of the day.
Yeah, interesting. And yeah, Clemens, keen to get your thoughts on this as well in terms of the direction of travel over the next 5-10 years.
Yeah, no, absolutely. Definitely echo some of the points, Anthony, you mentioned as well. What we're seeing. I think I would probably name three big things. The first one being that some form of pay flexibility is going to become the norm. Yes, there will be differences in industry and countries, but some kind of, a certain degree of more flexible approaches to how people are being paid. I'm 100% sure is going to be the normal way, whether that is someone starting to pay people weekly instead of monthly, or whether there's someone using an AWA provider. Like I said earlier, we're seeing kind of a new generation making up a larger and larger share in the workforce that is living in an on-demand world. So I think that will be very much driving that. Secondly, I think we're already seeing different people approach this challenge in different ways. I mean, yes, there are providers like us, but there are B2C providers. There are payroll companies that are trying to have this as their solution. We see, I think it was mentioned earlier, the neobanks offering some tools to get your money earlier. I think we'll see a lot more of that, and there's probably some creative ways that at least I'm not even thinking about now that we're going to see in the next 5 or 10 years that tackle this as well. And then if I think about, maybe it's not 5 years, maybe it's more a 10-year horizon, I do believe at some point we're going to move to what I would call a complete decoupling of the pay cycles that we have today. I mean, it is very rigid for, I think, largely for the reasons, Anthony, that you mentioned at the beginning, that there's so much else to it around tax and real-time reporting. And if we can fix those more structural things, which it's not going to happen in the next 2-3 years, but we can get to a point where there's just full flexibility. And then as an employee, I join a job and I decide whenever I want to kind of cash in on that effort that I've made by going to work.
Cool. Thank you. It's interesting. You kind of say that actually it's going to be having these flexible pay options will become the norm, in the coming years, and therefore, I guess as employees, we need to be understanding about all these different options and kind of what pros and cons of each, and what's actually best suited to us as employees. And Apple, in terms of obviously Visa, you've recently rolled this solution out, but in terms of educating employees about the use of AWA, so they are kind of clued up on what this is and the purpose and objective of it. Are there any kind of best practices that you kind of see in the market that support employees to make best use of this?
So I think, as to like Clemens and what Anthony mentioned, this will eventually evolve over just being a way to access your money. It will eventually, and we're already seeing this, a lot of providers and employers themselves, they advocate this as a tool for financial well-being. And when you're talking about financial well-being, there's a whole list of other things that come along with it. Is it better money management? Is it spending wisely? How to bucket your finances? How to account for it? And there comes with it both, like you're educating the employees on how to spend money better, how to manage money better, while building products on top of it. So in terms of how we see this happen, you talk to employees about financial well-being, and on-demand access to pay becomes one aspect of it. And then you have products built on top of this, which is, as Anthony mentioned, is it a wallet? Is it a spending account? Or you have, vouchers or credit points that you can use? Or if you're accessing your pay 4 times a month, you have certain points associated with that, and you try and reward positive customer behavior. You incentivize them to use this tool in a way that is beneficial for their financial well-being. So it's a lot about education, but also building a product which is just more than accessing your pages sooner. So it goes hand in hand, and that's what we are seeing. So when Visa recently implemented that, as you spoke about, so it's a lot about talking to employees that this is available, you can use it, this is how you should use it. It's not something that you use just because it's available. You use it because this is a financial well-being tool. See if you need it. If you don't, check the product out, see if you like it. So it's still in the adoption phase right now. I think we are seeing adoption depending on industry we spoke about earlier, but it's a lot about educating and building products on top of it to support financial well-being.
Yeah, interesting. So more of that holistic offering, not just not just one. Okay, interesting. And in terms of kind of measuring the success of the implementation of AWA, how are companies doing this? Are there particular metrics that they're looking at the moment? And Clemens, I'll start with you on this one.
Sure. Yeah. I think it really depends on what the company is trying to achieve. If the company says, I'm implementing this because I want to reduce my costs of staff retention, then that is the main metric that I would encourage. What's the retention rate between the people who use accelerated wage access versus the ones that don't? If you're looking at attraction of new employees, things like the number, the quality of applications, time to fill a role, what has been the performance score of people after they've been hired, might be some things to look at. What we're seeing actually a bit more now, again, is this kind of more holistic view around financial well-being. It's definitely the big top of mind thing today in the HR world. After, we talked about physical well-being maybe 20 years ago, we talked about mental well-being over the last 10 years. Everyone's now talking about financial well-being. That one is definitely a bit harder to measure, but there are ways. I mean, we in the Hasty app have a financial health check that we often do with the company right at launch to see where are people right now. And then we'll try to do it again 6 months' time and do a bit of a test of, again, the people who've used the app, how has their health changed? The people who haven't used the app, how has that health changed? So lots of different ways, I think, how you can measure this.
Good stuff. We've got a question coming from Mark here, popped up on screen, so which we'll cover off. How do you all see cards playing a role in AWA? Anthony, do you want to take this one?
I mean, they play a role today, right? So they definitely have played a role because there are certain individuals that are unbanked or underbanked or underserved, right? That probably can still use a financial they need a banking product. Typically, there's been a connection between payroll cards and this as well. So, and that's, when you get a payroll card, you also can get access to EWA. And a lot of individuals have been offering, or individual companies, I should say, have been offering free transactional or no transactional fees if you put it on a card, right? Because there's obviously a revenue opportunity on the card itself. I do think look, cards will continue to play a role. There always will be individuals. We have, for example, one quick example too is like the gig space, where you're seeing more of an adoption rate, a higher adoption rate, because a lot of times they also throw in rewards, and we have Uber, for example, gives gas rewards and things where, this is being used by their drivers. So there are aspects that they're trying to tie many things together as it relates to this, because it isn't, I think to everyone's point here, it's become a normal circumstance. So yeah, cards will continue to play a role, but again, if I can quote my esteemed colleague here in terms of Visa Direct, we're still going to see a significant amount of individuals that will want to get it to their own account no matter what, right? So you really have to provide, I always say there's no silver bullet. You have to provide multiple payment options to get it across. And I think there will be more alongside the cards as well.
Cool. Because I'm conscious we've just hit 5 o'clock UK time, so the hour has totally flown by. So we'll draw the discussion to a close. So I just wanted to thank our panel here today. So Clemens, Apoorv, Anthony, thank you so much for your time and your insight this afternoon. It's been fascinating discussing this topic with you. And yeah, we'll close the call now, but thank you everybody for joining us this afternoon, and we'll speak to you all soon.
Fantastic. Nice speaking with you all.
Thank you.